Welcome to The Issue. I'm Mark Carr, and on this edition of The Issue, we'll be discussing infrastructure with Marty Stans, Vice Chair of the Board of Directors of the Burlington Chamber of Commerce. But first, our topic will be real estate. My co-host tonight is Mike Wallace, former city councillor, member of parliament, and successful real estate agent in Burlington, and marathon man,
yes,
I understand.
Yes.
I was listening to the CBC about 4:30 today, Mike, and it was such a surprise to hear them introduce you as the individual who's run 10 marathons in the last 16 years, one in every province.
Yeah, I just got back this weekend from my last of my 10 from St. John's, Newfoundland, and CBC television actually picked it up out there, and I got interviewed out there, and CBC radio heard about it, and they asked me to come in and for an interview today. So, you know, the marathon for me was a goal to run one in every province, to be able to make sure I saw all of Canada and technically run across Canada. So I'm glad it's done, and the accountability aspect of everybody asked me when you're finishing, it's all over now, so I'm done now. So we'll see what I do next.
Okay, and you have brought Conrad, so
yes,
I'll
sure.
turn it over to you and let you introduce him and what we're going to talk about.
Well, tonight, ladies and gentlemen, we have Conrad Zurini with us, who is the broker of record for RE/MAX Escarpment, which means he's in charge. And RE/MAX Escarpment is a organization here in the Hamilton, Burlington marketplace that is doing very well. In fact, if you look at the first 6 months of the sales from the Hamilton Burlington board, Conrad's team from RE/MAX Escarpment did more than 50% of the sales of the whole board. So
really?
very active brokerage and very knowledgeable about the real estate business here in town. So I thought I'd ask Conrad to join us tonight to talk a little bit about what's actually happening in the real estate business.
Okay, but Mike, first of all, I'd like to let everyone know that they can get in touch and they can ask Conrad a question if they want to on Twitter at #TheIssue or on Facebook, The Issue, or they can call 905-333-6088. That's 6088. And if they want to join the conversation, and maybe they can ask Conrad a question.
So Conrad, just if you could tell the audience a little bit about maybe the family history or the history of your involvement in real estate, so we understand that your credibility as
my
understanding
parents,
the marketplace.
well, thanks for having me here tonight. My parents started in 1970 in a small independent office in the east end of Hamilton, and over the years we became a RE/MAX franchise and kind of amalgamated with other franchises and kind of grew to where we are today with 8 offices and approximately 470 sales associates.
Very good.
Between Grimsby, from the Grimsby border to Oakville.
Very good, thanks. Now, people talk to me now that I am a realtor, talking to me, about a bubble. Can you explain to me what they mean by, or what people think a real estate bubble is? Do you know in terms of what effect it has on the marketplace? And are we actually in a bubble here in the Hamilton-Burlington marketplace?
I think we've seen some tremendous growth over the last 10 to 15 years, without question. Part of that's been fueled by immigration. So Halton sees about 3,000 immigrants a year coming to the area. Same thing for Hamilton. The migration from the GTA is equal to about 3,000 to 4,000 people migrating from the GTA, immigrants migrating to Hamilton for the dream of owning a home and coming to Burlington. 46% of all the sales that occur in Burlington are from the GTA, from the Toronto area. So they're cashing out of their home in Toronto, in the GTA, in the Toronto area, and they're moving here.
Moving a little west for cheaper, prices?
We're seeing 2 types of buyers. We're seeing the type of buyer that's actually doing a lateral move in terms of dollar value and getting that much more home, a greater amount of home, or they're actually cashing in and they're using the money to invest, or to invest in real estate again, or possibly the stock market. But they're using that surplus money to do other things. So we're seeing that they're helping their kids buy a home, which is a big part of the market right now, and what I call the bank of mom and dad.
Right. So when we get the numbers from the real estate board about supply, it seems like supply is down. and that might
Sales are down, are they not? But the value of the homes are up?
The sales, I'll let you answer that, but I think sales are not there's less to be sold, so sales are going to be down in that sense. But what do you think?
Well, sales are like if you take the Hamilton Burlington board, sales are marginally up. They're up a quarter point in terms of units, but we had a banner year last year where we sold about 16,200 units were sold last year in Hamilton Burlington. So they're up about a quarter point year to date so far. But what's happening is the Toronto buyer is not replenishing the inventory. So in a normal market, you'd have people moving up and selling their home in Burlington, Burlington South, or they're coming from Burlington North, moving to Burlington South, coming from a condo, moving upwards. Well, now we're seeing people coming from the GTA not actually replenishing the supply. So we've got greater amount of buyers coming to our market, which are not replenishing, they're not selling their home and moving up, they're just coming into the market at different levels. So they're not putting more units into the system. So that's where we see the strength.
So that drives the price of an individual home.
Pure, remember your 101 economics, it's supply and demand. So we're seeing a greater amount of buyers coming to this marketplace without replenishing any of the supply.
Is that good for society in Halton as a whole, when young people, kids that grew up in Halton, Oakville, Burlington, and can't buy a house here and have to move out of the area? Does that bother you at all?
Well, I think it's a phenomenon that's all over North America. Like when we look at New York, Manhattan, even Chicago, major centers, they got to a point where it kind of priced themselves out of the market. And then they had to look at ways to relax development and talk about, I know your later guest is going to be talking about intensification, giving people opportunities to be able to increase that supply. And that's part of our problem here in Southern Ontario. It's the supply issue between the Greenbelt, that restricted development everywhere. We weren't allowed to develop because somebody came up with an idea that greenfield development costs municipalities money, and you would know that, Mike. It costs municipalities money and for infrastructure and all that kind of thing. So they really cap development. But what that does is it then limits supply, and then people like young people can't afford to buy in their own municipality. The good news is that Hamilton is right next door, and we're seeing a lot of great growth down the whole peninsula. So when people are moving from Hamilton and they're going to, let's say, Dunnville's, your Cayugas, are moving further down the Niagara Peninsula, we're seeing some great growth in the Niagara area. And
the whole idea of intensification was to utilize the existing services and not expand. And what you're saying is the young people have to move out. But that leaves Burlington in particular in a difficult situation when you've got one age group of people, and I believe, Mike, you can correct me on this, that Burlington has the oldest average age of any town or city in the GTA.
Well, all I know is that when I was in Burlington South, 50% of the people were over 50. And we have experienced schools closing. It's not because the education was bad, it's just there weren't enough kids to go to. So that has happened particularly in the south part of Burlington. So the issue of supply and the pricing, we hear often, well, I can't believe the price of my house is what it is today compared to, and part of the bubble is saying, well, there's going to be a burst and prices will fall. How do you feel about that?
That's only a paper increase, isn't it? It's not until you actually sell the place that
but if you bought your house at $200,000 and it's now worth $800,000, but it goes down to $600,000, it's still a loss in your mind. I would like to know your opinion on what's your forecast for pricing?
The largest group of buyers coming into the pipeline are the millennials, and we've got and the immigrants that are coming to this country are of that household age. So until we see that those people stopping to come, or they change some sort of immigration laws and we get less people coming, we're not going to, I don't think you're going to see a bubble, so to speak, like we did in the late 80s. And what happened was it was a large group of buyers, which were the boomers, that they bought their home and then they stopped, and then the next generation after them wasn't as large as they were. So we didn't see that same kind of momentum. Here we're seeing, it's the perfect storm. We're seeing a huge group of the Echo group, which is the millennials today, plus you're seeing immigrants of that age, of household creation age. So with that coming to play, until we see something changing in terms of those demographics, it's going to be a long time before you see any relaxation in terms of pricing. Because again, it's a supply.
But we really, that policy is, I mean, in Halton here, it's going to grow and grow and grow. That's in the official plan. It was in Burlington's official plan, in Oakville's official plan, and so that's not even on the books to change that. They have to take those people, and the people have to go somewhere.
Yes.
Yeah. For a first-time buyer, do you have any advice for a first-time buyer in this marketplace?
Well, I think that, consult a realtor. There's no question. I think that your best bet, your best friend in this market is that, and really put your realtor to task and talk about where are some of the up-and-coming neighborhoods, where do I see some value. Home ownership, single detached home ownership is on everybody's radar screen. But if you go to Vancouver, most of the buyers have gotten to the fact, well, I can't buy a single detached until I've had 2 or 3 condominiums. So there's a mindset there. So you're going to have to, you're not going to get that single detached maybe right away, or maybe you're fortunate enough to do that. I'm thinking that for first-time buyers, and especially about 10 to 15% are getting some of the down payment from their parents, maybe instead of just getting the money as a lump sum to them, maybe they put money in their RSP, start an RSP for them, and then draw on that RSP after 90 days. So now you've got, now you're saving for your retirement at the same time as you are being able to use your RSPs for your down payment. So things like that. The other thing is, it's a great opportunity for parents to help their kids invest in another piece of real estate.
Right.
And we're seeing documentation today that is saying, hey, if I'm going to lend you the money for the home, I want to share in some of that equity possibly. So looking at those kind of agreements. So it gives an opportunity for someone that would never have invested in real estate and get into owning another home through their children. They can share in some of that equity growth. So there's some opportunities there, and there's opportunities again for people to look at investment properties and using some of their equity for investment properties and things like that.
I just want to give the phone number again, because if any of our audience out there has had difficulty breaking into the market, or knows somebody that's had difficulty breaking into the market, give us a call at 905-333-6088, and Kim Slonwhite is handling our social media at #TheIssue on Twitter, or on Facebook, The Issue, and Kim will answer those calls and pass them on to us, and she's with Clear Path Media. So, sorry, go ahead. Just wanted to throw that in.
Yeah, no problem. So I agree with you on the first-time buyers. For example, I have 2 daughters, 23. One's moving to a different country, but the other one is 25, and her significant other have been looking in. My experience was that when I bought my first house, a lot of my age group, they were looking to replace what they had at home, in a sense, and that they thought they could, and their first home would be close to what their parents already had after 30 years or whatever it was there. I don't see that as a possibility these days, or it's rare. So what, in terms of expectations for young people, I get some pushback from some of my clients that I have that are young people who are not sure about condominiums. How do you, what should I be telling people? What would you tell people about the advantage of a condominium if you're starting out as a first-time buyer?
Well, I think it's a great way to enter the market. It always has been. And you don't have to worry about repairs or ongoing maintenance and things like that. It's all handled. A portion of your condo fees go into a reserve fund, which looks after the building over the long haul. And a lot of these buyers that you're talking about too, it's a lifestyle choice. Walkability is a big piece. What's happening in Aldershot right now, the condo growth there, we're seeing a huge renaissance that's happened over the last 5-6 years. I think you're going to see more retail, more walkability in Aldershot, and it's going to be very, very attractive for first-time buyers, without question. And I think a lot of these buyers are looking at these amenities as being where they are. So maybe they're going to look at something a little smaller. They're not like like my parents' generation that looked at the home and their home was their castle, and they I'm not saying they were house poor, but they tried to save their money for their home and put a lot of assets and equity into their home. We're seeing young consumers looking at things a little differently. They'll live with a smaller home and they'll look at borrowing against their home to buy an investment property. So we're seeing a whole different type of buyer that's emerging right now, and looking at smaller type properties, easier to take care of, and then building that equity, and then future going on to family sizes are smaller than they used to be. So you could actually live in a condominium a lot longer, and I think that it's all about looking at what's around you, the amenities, and I think if you can get into the entry level, wherever it might be, you've got to get in the game. You've got to get into the market. And we're seeing today more young people that are saving money for their down payment. Not just, and I talked about Bank of Mom and Dad, but a lot of, we have a lender in our office talking just the other day, a lot of their people are more than 5% down. In terms of they're at 10% down and they're trying to be conventional because they're savvy. They don't want to pay the CMHC insurance. Now we're going to probably
that only comes into play when you have less than the 5%.
5%. When you have 5% down, yes,
and you have to buy that insurance through CMHC.
So we're seeing there's going to be a trend out there. They're talking about maybe eliminating the 5% down, but I think what's going to happen is you're going to see CMHC increase the premiums at the 5% and probably keep the same premium at 10%. So you'll see that. So that you're going to see people shifting into that 10% because they're going to want to save that premium.
Now, I assume a big aspect of the industry that both of you are in, the real estate business, is interest rates. So you have to keep an eye on interest rates. Where do you think we're going to see those heading in the next 4 or 5 years?
Well, until we see some real growth in terms of, we just talked about the oil patch and Canadian manufacturing and industry and that part of the economy, I don't see anything happening to interest rates for a very, very long time. Now, south of the border, this is a very interesting situation. South of the border, they hinted at it just this last little while, but now they're talking about maybe near the end of the year, talking about raising interest rates. It's going to be interesting to see, because usually we follow them, but the Bank of Canada has come out just recently talking about we're not going to see interest rates increase for a very, very long time. Industry is still not firing on all pistons, and that's probably.
But your industry is firing on all pistons.
And the spin-off of our industry is pretty incredible. And if you look at British Columbia and the taxes, I don't know if you read recently, but they've raised more money through the real estate industry and real estate transactions than they do through forestry, selling crown lands, natural gas, and all that kind of thing.
So maybe that's a bubble that's going to burst if there aren't as many sales, because if government starts relying on that money and not looking at it as found money, like new money if they start relying on it, that could be a real problem.
Absolutely. This is an opportunity to really start to utilize that money for that rainy day. And that's what we're doing in the real estate industry. As our company, we have now invested a lot of money in facilities because we've had some really great years. But again, we know that down the road, we won't have those kind of great years. And we still want to be able to give our clients that great client experience that they've come to know. Okay, it's a big investment. And that's part of it. It's part of the whole client experience, and we've really invested a lot of money in technology, facilities, and that whole client experience, so that when that rainy day does come, we'll be well equipped.
If you had one piece of advice in the last minute here to pass on to our viewers, what would it be?
I'd start looking at emerging markets. I'd like to look at undervalued markets like the east end of Hamilton. Start to look beyond the borders of just Burlington. There are some pockets in Burlington where there are some We haven't seen as much appreciation as we have in other areas. But look at some of these areas. I think East Hamilton is probably, it hugs this Burlington border. You've got every transportation corridor there. There's going to be a GO station in the East End. You've got the Red Hill. You've got the QEW. And I always tell people, if you're looking at getting that single detached, the best opportunity you have for the best growth in terms of your investment is find the entry-level detached in any neighborhood.
Okay.
So look in a neighborhood, find the entry-level detached, and that's your home to buy.
And use a realtor.
100%.
Don't
consult a realtor.
Not any of the com-frees. Use a realtor. Thanks for joining us tonight. That was good. We're going to take a break, and we're going to be right back here on The Issue. I'm Mark Carr.